Okay, this is Sean here, August 9th. Going to go over our strategic to tactical market review. Figured I'd do it a little bit earlier this week, not wait till Monday, when if there are any setups, they may have already happened, like what happened last week with Priceline. Again, sorry about that. Let's start off here just for this week, being the damage that has been done tactically. Just take a look and see how it looks strategically. So this is a chart of the S&P 500, the monthly, and what we notice is we're still in a very strong uptrend. And the only thing that is somewhat of a warning sign is I have this little bit of this monthly reversal bar for July, and it's triggered red bar here. So, but as you know, there has been a few of these along the way in this bull market, and have been quickly nullified, if you will. I mean, you know, here's a reversal, and it came back in 2012. There's a couple even in 2013, and they were just basically 1 month wonders or 1.5 month wonder. So we'll see what happens here. So nothing to be alarmed about, other than again something to take note. And again, we know that on the tactical side we've had a bit of a bump in the road. So no surprise that it shows up in a small way, at least for now, on the strategic side. We go to the weekly. As you can tell, here's this uptrend going back to 2012. I mean, we can even take it down. It'll probably take us back to 2011. It's still clearly intact. You can see the moving average. No moving average has been violated. Here we are right now, and we actually have a pretty good reversal week. Last week, a little bit of a reversal bar going in. Again, I'm not a big reversal bar proponent, but we'll see what happens. So without further ado, we'll go right to the strategic on basically the daily. So we saw the weekly reversal, so we've closed higher than we started the week. Of note, we had this market extreme indicator going into the past week, which basically tells me to look for relative strength stocks that are relatively strong to be a buyer of, which I did get involved. The only one that really worked out with any vigor was Priceline, which happened right off the bat on Monday. Let me just take a quick look at that. So here was Monday right here, and again, I was a little late in putting this out. Didn't think it would happen that early. I mean, it happened right off the bat on Monday morning, and it took out these levels. You could see, Priceline was very much stronger than the market. The market had sold off pretty hard the previous week, and Priceline held in like a champ. Had these levels here, took it out, and the rest is history. The rest of the week was just a chop fest, kind of real messy. Tactically, the tactical positions I had, got out of most of them, got out of some at 1300, and then the rest I got out of about 1290. And then I've kind of played it throughout the week. I probably really just broke even at the end of the day on them, the positions I played during the week. But I was also short puts from Monday, and they expired worthless on Friday, which was good. But that was the play of the week. Again, here's the S&P, so let's take a look real quick as to where we stand. Friday was actually pretty strong up day. We've relieved some of this oversold conditions in the oscillators. So as you can see, we went from blue to green bars. Now we're gray bars, meaning this market extreme, at least the oversold condition is actually somewhat alleviated, even though we really haven't bounced in the market. So one thing I'm going to want to take a look at is Our micro resistance going into next week is going to be Friday's high, which we're closed pretty close to, although I know after the close on Friday, I think we sold off in the last 15 minutes somewhat in the index, or the futures anyway. So we'll see how that transpires over to Monday. That's our micro resistance is right here at 1930. Then we have some greater resistance, which was the week's high of 1943-ish. But again, 1950 is going to be, our 50-day. That's the moving average resistance. Is this 50-day way up in here, which is 1955. So the market has a lot to prove if it gets back into this bullish case. It's really going to have to take out that 1930. It's got to really get above this 1940-ish, and I mean, I will not say we're out of the woods as far as this down move until we close above the 50-day and actually stay above 50-day for at least a couple days. Where if anyone who was playing the short side or sold their stocks, and the market then stabilizes above this 50-day, you're going to get nervous and be looking to cover your shorts, and or if you're just light, being on the long side, looking to chase some performance. So we're clearly tactically still in this bearish tone. Okay, our support, which held pretty well, as this 1900 level here, which was really this prior breakout level that the market so far bounced off of. Here's the 100-day, which we penetrated just on one day, but then again Friday broke right back above it. So so right there, that's our big support. If they take that out with any any force next week, then you're looking at the 150-day and then the 200-day, which is even further below. 150 days at 1885 level, 200 days like 1860-ish. So there you go. There you have it in a nutshell. Again, there's a lot of geopolitical risk, if you will. That's really, so there's a lot of weight on the market through the media and through the geopolitical realm, and that's obviously has the markets under pressure. That being said, I'm actually somewhat surprised during the end of the week last week, where there was, we had this perfect storm of geopolitical negativity with Russia and the Ukraine and the ISIS taking over Iraq, and the market actually held in quite well. So, but we'll see if if the second part of that is going to play out, as we really need the market then to go and take out some resistance levels to prove that it was that underlying strength is warranted. Nasdaq, again, a little bit stronger than the S&P. It's kind of been holding in here all week. Was just kind of a sideways chop fest. So our our micro resistance here, I mean, obviously it looks a little bit weaker. Friday wasn't as much of a up move. High beta really didn't take advantage of that up move on Friday, which was quite interesting because high beta actually had been stronger throughout the week than the S&P, but Friday on the big up day, so a lot of high beta names kind of lagged a bit. So we'll see. Maybe things are just changing. I saw utilities, some defensive names really had the strength on Friday again, which may actually be more of a bearish sign as market participants get a little more defensive. But we'll see, the big resistance, at least for now. I think going into next week is going to be the weekly high of last week in the Nasdaq, which is roughly 43.95, so 4,400. Let's call it that. 4,400 is going to be a pretty big a level here if they can pop that, break above this. What is this? The 21 day again, and if the Nasdaq can pop above its 21 day, that would be quite amazing, quite impressive. It's flirting right now, right, with this 50 day. So support is going to be the weekly low. So 43.20 is going to be sort of that support going into next week. That if they can take that down, next level is going to be next level. Let's see where the next the 100 day is. We know that. Yeah, so the next level is really going to be, which kind of makes sense, is 42.60-ish area would be the next level of potential support. Again, we'll wait and see with the Nasdaq, and we will go over the Russell 2000, since the Russell has been what has really sort of been the warning flag to this latest weakness, as it was the weakest all July, but it actually did quite well last week. And now, if you see this little descending channel, and we're up against the top end of that descending channel, if it can pop through above next week, that would sort of break this down channel, and then the market could, if it can just stabilize, and that would actually be quite a bullish pattern if that develops. But again, we'll wait and see how that goes, and that's all I have really for the indices. I will go over some tactical setups in my tactical setup video. Thanks for listening.